Ladies and gentlemen, welcome back to the channel. What a spooky market for a not spooky time of the year. Again, we have no idea what really caused the sell-off yesterday. We all have some ideas. I've heard 10-year treasury yields being thrown around. I've heard low volume and retail investors were super just negative. I've heard algorithms secretly know something that we do not. Hell, I've heard aliens are coming next week. I've heard a lot. But as I will explain a little bit more in the next video, I think it really has to do with all of this, minus hopefully not aliens coming next week. I think from a tactical perspective, we all think, or at least according to CNBC's latest survey, 75% of hedge fund managers expect that large cap tech is going to underperform cyclicals, value, and small caps next year. So maybe that makes sense to why big tech sold off. Maybe it makes sense why cyclicals, small caps, value, and the average stock in the S&P also sold off because of tax loss harvesting reasons. Okay, maybe there was just tax loss harvesting and hedge funds and institutions tried to sell big tech before everyone else gets the same idea. Okay, that would make sense why the markets would, broadly speaking, just decline. Now, there were some positive signs, some diamonds in the rough, if you will, of the sell-off that we seen on Friday. First and foremost, the RSP did much better than the S&P. Like, it was still red. The RSP has still gotten destroyed in December. You've seen a lot of tax loss harvesting, but it was only down 0.68% versus 1.05% down in the S&P. That's almost twice as good, or the S&P did twice as bad as the RSP. The RSP is the equal weight S&P. S&P is obviously headline S&P. So there was a little bit more selling in big tech than other areas, okay? I think Monday and Tuesday could actually turn out to be a bit of a recovery because normally when you have sell-offs in the markets where nobody really understands why markets are selling off, like ask anyone, just go watch any videos posted on YouTube or CNBC or Charles Schwab Network or Yahoo Finance, and nobody really knows why markets sold off on Friday. It's the craziest thing. It's like spooky almost. Okay, there's a lot of opinions, but nobody knows for sure what happened. Now, here in this video, we will discuss Tesla. We will look at the option activity, the short positioning in Tesla. We will look at all of your Tesla stock breaking news that is coming out today, some of which is actually pretty positive. And in all reality, I expect in 2025, Tesla's going to do very well. And yes, it makes sense why hedge funds and institutions would cover on their short positions, tactically speaking, into the end of this year, right? Think about it like this. You've seen a lot of tax loss harvesting in the broader markets. If you were a hedge fund or institution and maybe you were bearish on Tesla in the 200s, you did not expect things to go this well. You did not expect Trump to win or the bull narrative to prevail. After all, you shorted when the stock was like $200 some, okay? You're wrong. You've been proven wrong. You're just wrong. Well, if you have a huge taxable gain liability for 2024, but instead of paying all of that, you can go ahead and cover on your short position in Tesla, realize that loss, and have to pay less in capital gains and not be short on Tesla in what could be a really good year, which is 2025, next year. That makes a lot of sense. After all, it doesn't affect your P&L because you're short in the stock, right? Doesn't matter. Your P&L is still affected because you've been short in the stock and you've already lost that money, okay? So that's kind of the reason for the tactical bullish call into year end, but I do think we will start to see a broader market rally in January, and we will start to see, at least in the first couple of months of 2025, this broader kind of market participation, because again, most hedge funds and institutions expect that big tech will underperform, and there's really a lot of reasons for that, but number one is big tech is expected to grow slower than the rest of the markets as far as earnings. So that's a big part of it, okay? Now, Let's take a look at this first and foremost. Dan Ives says that Tesla to $515 is the base case and bull case is $650 over the next 12 months. He says that tech weakness is a buying opportunity in stocks poised to benefit from AI revolution. I think 650 could be on the low side. Again, I think we could go as high as $900+ per share next year if all goes well. Like, we cannot have a major setback in Robotaxi and get to $900+. But if all goes well and we get Robotaxi that launches in 4 to 8 states next year or 10 states next year, you could easily see Tesla in the 900s because there is so much growth ahead of us for Tesla. Who the hell are you to say, or am I to say that, to limit Tesla with growth opportunities that are as large as Robotaxi and humanoid robots?
How about Tesla? And you project Tesla to be a huge winner?
I mean, it's the bet for the ages when you look at Musk's bet on Trump, because when it comes to autonomous, I think autonomous is worth $1 trillion alone. And for all those Karate Kid fans, it's a sweep the leg moment. What's happened in the Beltway when it comes to regulatory. And that's a huge part. The biggest beneficiary from all of this is going to be Musk and Tesla. And that's why you've seen a lot of bears go deep into their caves in hibernation mode over the last month.
When we think about Tesla, we may not have EV subsidies, but Tesla is so much more than just an automobile. Tesla is so much more, right? People shouldn't even think of this as just a car company or just an EV company.
Look, calling them a car company, I think is actually it's an insult. This is a disruptive technology company that now, when you look at autonomous and robotics, that's the next step in the Tesla story. Is the gold at the end of the rainbow. And that's why I think we're just getting started in this next stage of Tesla as autonomous now becomes front and center over the coming years.
What's your I guess, base case and bull case for the new year for Tesla?
Look, base case is 515's base case, bull case is 650. And Nicole, I think it would be conservative when you think about $2 trillion. I think this is one of it. If it plays out, because we assume no value for Optimus. You start to put Optimus value in there, you get a lot more than $2 trillion.
Keep in mind, Dan Ives is one of the top tech analysts in the entire world. And he says that you could, quote, get a lot more than $2 trillion if you start to add Optimus to that equation, which by the end of 2025, Wall Street's going to be focusing on 2026, and Optimus may actually be in the modeling. It may actually be something of conversation, of material matters to Tesla stock investors. I would not count that out by next year. Now, obviously, is that a January 1st kind of, assumption that Optimus is going to all of a sudden be priced into Tesla? Of course not. But throughout 2025, that is really the exponential building block. That is the tail to Tesla. In the book that I recently read from Josh Brown, he's a frequent contributor on CNBC. He does the podcast Compound and Friends. If you guys have ever watched that, let me know down below in the comment section. It's on YouTube. Great podcast. You should definitely check it out. But he explains that the markets really move off of tails, right? You have, think of like a standard deviation bell curve, okay? In the middle, you have consensus, right? What everyone thinks is going to happen. On the, one standard deviation, you have what nobody really expects to happen, but is not unreasonable, right? Same is true for the positive, right? Positive, negative. And then way on the other sides of the curve, you have like recession and catastrophe over here. And then you have booming economy, low inflation, good M&A activity, IPO activity, a craze in markets, okay? On the bell curve, right, if this is like the middle, you could see Tesla start to extend out here if things go well, right? From an interest rate perspective, from an economic perspective, and from development of Optimus. If that continues to evolve, you could, by the end of 2025, be looking at Tesla as much more than just a robotaxi network, a car company, a battery company. We could be taking that next leap into a Optimus, which is essentially what happened this year. Not a lot of people were talking about robotaxis, and that's why we were so bullish here on this channel for Tesla into year end, calling for new all-time highs, okay? Calling for 450, and as recently, 500. Yeah, sure, that hasn't been as correct because markets are doing what they want. It's wonky season, okay? Let's acknowledge that. But it was kind of the bell curve that started to really skew in the positive direction. It was that tail of robotaxis coming faster than a lot of Wall Street expected that really drove that material upside for Tesla since the election. That's what we could see towards the end of 2025. Now, as I explain a little bit more in the next video, I think the stage is set for a very good environment, a very benign environment for Tesla where things could, I could see at least, go very well. With that said, it is being reported in other Tesla news today. King County purchased 120 Tesla Model Ys. They will be used for car sharing services. And in totally not Tesla news, Goldman Sachs expects the Fed to cut rates by 0.25% in March, June, and September, which is kind of out of consensus at this point. Wall Street is only currently expecting 1.5 cuts or so next year. And in some really big news today, Tesla is now offering free lifetime supercharging when you buy a new Foundation Series Cybertruck from inventory. Orders must be placed on or after December 27, 2024, with free lifetime supercharging that is non-transferable, with more information posted on Tesla's website. Honda's CEO said it was, quote, difficult to explain why merging with Nissan would be a good business move. That's a difficult one, said their CEO, which kind of fits the picture here with a whole bunch of question marks. It's not really something you expect to hear from a company that is merging with another company. At least that's not what I would like to hear if I was a shareholder in Honda or Nissan. Elon Musk posted on X that he named Tesla after Nikola Tesla, one of the greatest engineers ever. He was a penniless immigrant whose inventions led to American dominance in electricity generation and usage, okay? Now, for anyone that does not know, I guess this really has little to do with Tesla today in Tesla's current form, but Nikola Tesla, AC/DC, was not just a band. You have alternating current and direct current. What is in your home is direct current. Alternating current is a Tesla charger. It is something that has a fluctuating power usage level. It was Thomas Edison who created DC. It says here Edison's rival Nikola Tesla invented alternating current, AC, which has a changing direction as it flows. Tesla's AC system was more sophisticated than Edison's DC system, and it could be more easily transformed to higher voltages. This allows AC to be transmitted over long distances with less loss of power in the wires. Yeah, a little history lesson on Nikola Tesla, which created AC. Now, let's focus in on the option activity that we've seen on Friday. You had 233 different trades totaling $193.2 million. Considering Tesla stock was down about 5%, these are very low levels. This is kind of indicating the low volume that we had in markets today. There was just low activity. I keep saying today, but Friday, there was just low volume, okay? Now, the S&P had decent volume, almost 65 million or so in volume. It was like double what you seen on Christmas Eve. It was a half day on Christmas Eve, so take that into consideration. And Tesla had just kind of average volume. I mean, kind of on the low side. You had 82.5 million shares traded hands. Some days recently, like December 18th, you had 150 million shares trade hands. So it was kind of a lower volume day, but especially in the options market, from hedge funds and institutions. It was a very low volume day. You did have a positive order value of 67%, which it's not super good, but it's not bad at all. It's not even close to bad. It's still 67% positive versus 43% negative. So, or 33% negative. So still not bad at all by any stretch of the imagination, but not as good as what we have seen recently. Okay, so that is notable. Now, on Friday, you had 1.77 million shares on net that were sold short as well. So there was quite a bit of shorting activity that you've seen on Friday, which probably helps to explain the 5% drop that we've seen in Tesla. Now, I don't know if short sellers are drunk, blind, or stupid, or all three, because they continue to double down in their short positions. Tesla's short interest of free float now at 2.89%. $36.6 billion sold short in Tesla currently, totaling 80.59 million shares that are sold short. That is up from 76.3 million you just had, in early December. So like they're doubling down on short positions. They're not taking this opportunity to do what you would think would be the responsible thing and actually cover on that short position. They're going even more all in. Now, Google Trends data for the United States looks really good. The Cybertruck is at 53. Model Y is at 36. The Model 3 at 30. The Model S at 14. And the Model X at 12. All of your Tesla models are moving in the right direction. That is up and to the right. There's more search trend activity than we had yesterday. The Cybertruck is at 80, which is really shooting up from 72. The Model Y fell from 67 down to 65. The Model 3 went from 52 to 56, so that is up. And the Model S is at 24, and the Model X is at 17. All of these numbers as well look pretty good. Over on StockTwits, sentiment for Tesla is neutral at 49. Yesterday, it was bullish at 58, so that's actually pretty good, again, considering Tesla was down 5% on Friday. Message volume is normal. Yesterday, normal at 47. Yesterday, it was normal at 46. So pretty much unchanged there. And the participation ratio is normal at 54. Tesla continues to run about 5,000 different ads with Google. And if we look at total global inventories, they continue to plummet for the Tesla lineup. The Model Y at 3,500, the Model 3 at 2,500, the Model X at 1,900, and the Model S at 1,500. Tesla seems to really be working down that inventory this quarter, and that should hopefully help boost some profitability for Tesla in the upcoming quarterly report that we will get around January 22nd or so. We should be getting Tesla earnings, although that date is not confirmed, and it could vary a bit from there. Now, the last thing I will say here in this video about Tesla, obviously, Monday and Tuesday, as I said, is a bit of a toss-up. Anything can happen in the last 2 days of any trading year, but I do think there is many more reasons to be bullish on Tesla than to be bearish on Tesla, and purely from a kind of, balancing the bull and the bear thesis. The bull thesis well outpaces the bear thesis, although we don't know kind of what caused the sell-off on Friday. We don't know if there's a bigger issue here. That's kind of the thing that I would just keep my eyes on. Markets are very negative. CNN Fear and Greed Index is at 34. I mean, that's almost an extreme fear. That's pretty damn bad. And you do have over 65% of markets that are currently in a downtrend. 65% of stocks are below their 50-day moving average. Normally, when you get to these levels, you want to be bullish. You want to be buying something. And in the case of buying something, I don't think there's a better stock to own for 2025 than Tesla. I think Tesla is top tier as far as obviously AI and growth and new vehicles. There's a lot to be excited about. And sure, if you want to get your things in a bunch over the 5% drop that we seen on Friday, be my guest. have at it. Get your things in a bunch all you want. Okay. Me, I look at this as an opportunity. I thrive in volatile markets. I love it. I love when stocks fall. You know, as long as you're not nearing retirement, you should also like that opportunity to go out and buy more, to reposition from different areas into others. And I think Tesla is top tier again for 2025. So let me know what you guys think about this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.